stocks continue to lead the markets higher, or is it something else? Ted Oakley is with us, founder of Oxbow Advisors. Ted, I always love when you're on with us. You give us a great macro perspective. Today, we really saw the market searching for direction, a lot of back and forth, hovering around the unchanged line. And of course, there's always the outliers, Tesla closing above 1,000, Apple hitting a new high yesterday. Those kinds of names are a lot of fun, Peloton and the work from home stocks. But what's your big picture when you look at what's going on and take all the factors in?
Well, Nicole, I think what happens is for a little while longer, as long as they keep turning the money out, you'll continue to get the markets up. I don't know how long that lasts, maybe another couple of months or so. I know the PPP will finish up here in the next number of months. Not completely, but if you look at the other 8 or 9 pieces they have out there, there's a lot of money out there. And then they're buying the bonds this past week. So you've got a Fed really that's completely blown up capitalism. And so it's just now about momentum. And a lot of people play that game, and they'll go that direction. That's not something we like to do, but I think you'll see more of it.
Well, there's a lot of support right now from the Fed. The markets have moved higher and exponentially, 30%, right? And so do you think markets are overpriced right now or fairly priced?
Oh, unquestionably for us, very overpriced. Not only that market's overpriced, the stock market, but the bond market as well. And if you look at what a lot of these issues have done that are basically walking dead after the Fed has come in, now they're trading at 15, 20% premiums. They've blown up a lot of things, but certainly the credit markets and the stock market are well overpriced.
Well, for someone who has a portfolio that they look at and can trade, I guess your recommendation then would be to take a little off the table if you think that the run-up has been pretty great and you peel some off. That being said, for a long-term investor, what would be your advice?
Well, for longer-term investors, I'll give you an example. Someone comes in with new money today and they're in the stock market for us. We're going to buy companies that we think over the next 3 to 5 years can do well and won't get disrupted. That's the problem with so many companies today. So we're looking at companies that can still make the earnings, still make the dividends if they pay one, and they don't have a lot of debt. All those things will make a lot of difference over the next 3 to 5 years. That's the problem. So many companies out there, if you take the bottom 400 companies in the S&P 500, I'm not certain they're going to weather the storm as well, but we'll see. But that's what we look for, and that's what I would recommend for investors to look for.
I know you like growth names. You're mentioning them now, dividend-paying stocks. What are some of the go-tos for you when you're setting up a new portfolio? You probably have your 5 favorites. Maybe it's a sector. What do you look for?
Well, obviously, we own technology because, it's a low debt area. Microsoft is our biggest holding, and has been for the past 3 years, really. And that's in a growth portfolio for us. You'll see in there we own other things as well, though. We own healthcare. We've got quite a large holding in a number of things, but our largest would be obviously technology. On the dividend side, we run another strategy called dividend growth, and it has a lot of different things in it. If you look at it, we have Unilever, Nestle, a number of drugs, Pfizer, Merck, Novartis, things that pay a good dividend, and we think they can continue to pay that dividend as you go forward. So it depends on whether we're doing a growth or a dividend portfolio, but that's what we're looking for.
What do you think of some of these names that are a little newer? A name like Spotify, for example, which hit a new high, making deals with Kim Kardashian and boosting its podcasts and content, or maybe a name like Zoom Video or Peloton. Any of those names sort of grab you at all?
Well, it's not the type of company we would buy into, Nicole, and not because I don't think they'll go higher. I think they have a lot of curb appeal right now, and people will buy them. But for us, we're looking for fundamentals, and the fundamentals are overpriced in a number of those. Even though I'm not surprised that they're here and go higher. It's just not the type of company, that we would buy, and we certainly don't buy any of those companies where they're not making any money.
Right, and I'll tell you, Microsoft has been a great one, no doubt. Microsoft over 1 year is up about 45%, Ted. So you're doing pretty great. Ted Oakley, founder, Oxbow Advisors, thank you so much.